614 Startups Nation, welcome to another episode of the 614 Startups Podcast. My name is Elio Harmon, and I'm your host. And I've been going stir crazy, a little cabin fever since COVID-19. And this is the first time I'm back on the mic recording. And I got a very special guest for you, my man, Bill Baumel. Am I saying that correctly?
Perfect. Yeah.
Of Ohio Innovation Fund. Welcome, Bill. How you doing?
I'm doing great, Elio. Thank you very much, man. Great to be here.
All right, man. So I'm on lockdown like everybody about 3 weeks ago, and I get an email from Christina, I believe her name.
Yep.
And she's like, yo, Bill wants to talk to you. He wants to talk about COVID-19 and a wide range of issues. And so I go to Ohio Innovation Fund. I've heard of you guys before. Mainly, I've seen things that Jill has done.
Yeah.
And so I check out the resume. The resume is solid. And I'm like, yo, set up the phone call. I need to talk to Bill. And after that phone call, man, I understand why. You're a wealth of knowledge. You're very passionate about startups. So I'm excited to get you on here. I think the community needs to hear from you, especially for people who haven't heard of you before. So thank you so much for agreeing to be a guest.
Yeah, great to be here.
All right, man. So everybody starts with a bit of the background because we're a small community. We're all getting to know one another. So why don't you share your story?
Sure. Yeah, I actually grew up in Cincinnati, so have ties to Ohio from having grown up there. Went to Ohio State undergraduate, went to University of Michigan School up north for graduate school. Spent about 4 or 5 years in Minneapolis as a venture capitalist. We actually had an office in Minneapolis and an office out in Silicon Valley, primarily investing in Minneapolis, Boston, New York, Chicago a little bit, somewhat Atlanta, not so much around the rest of the Midwest. And then 15 years ago, actually 17 years ago, went out to Silicon Valley and spent obviously 17 years there as a venture capitalist, both on the tech and med tech side. Had 5 companies went public, 10 companies were acquired between 100 million and $1 billion, both on the tech and med tech side, SAP, Oracle, Medtronic, Stryker, those types of companies as far as acquisitions, public companies like Dexcom, Infinera, and such. And I had actually been, starting about 2007 or so, because I have family back here, been coming over the summertime, so particularly around 4th of July weekend. And one time went to an angel group, kind of invested in an angel fund back as passively, like in 2007. And was kind of tracking their progress. And over time, I thought early on the deals were kind of okay. A lot of the deals were kind of Me Too versus what we have out in Silicon Valley, like a disaster recovery company, very similar to what we had out there. But then probably in 2013, 2014, things started to change, and noticed that the type of software and med tech and other opportunities, well, not as many great opportunities, were similar in quality and potential to a lot of things I was seeing out in Silicon Valley. And that kind of is what really piqued my interest in potentially coming back this way. And what happened from there is that actually Ohio State and Ohio University did a search because they were wanting to, there's a lot of seed funds and angel funds here in Ohio. You have, like Cincy Tech and Queen City Angels down in Cincinnati, OTAF, Rev One here in Columbus, up north, Nose Coast Angel Fund, Jumpstart and such. Similarly, Tech Growth in Athens, you have some Dayton, Toledo, and all that. But not many traditional Series A venture firms for capital, but also to provide that expertise as far as scaling the company. Mm-hmm. And so I think both Ohio State, Ohio University, Kent State all realize that need here for their students, who are interested in entrepreneurship or interested in venture capital or interested in startups to really help get things going. And so they did a search on the coast for someone with ties to the Midwest or ties to Ohio that had been a successful venture capitalist either in Boston or Silicon Valley. And I think there's probably 2 or 3 of us. There really just aren't that many. So I came back, and my biggest thing was that the venture fund be structured as a traditional venture fund. I didn't want to come back here and do economic development, because if you talk about economic development to people on the coast, all they think about is charity and losing money. That's just like, okay, it's not like real businesses. I want to do companies that could kind of stand on their own, that merited the investments, that merited the time and effort, to help them realize their potential. So that was a big part of it. I also didn't want to be tied into politics either, because if you can come back here and be a hero early on by saying, everyone that's involved in this, we're investing in their companies and their favorite companies, and then they all got a business and you really haven't achieved anything.
Yeah, so I understand. Now, was it always in your kind of a goal or aspiration to become an investor? Did you fall into it? how did this whole investor thing come about? Because you've latched on, man, and you've been in the business ever since. So how did you become an investor?
Yeah, it's interesting. I've always been kind of an entrepreneur, and then I became an investor. Actually in Cincinnati, I had, I think, 30 or 40 lawns I cut each summer and like 40 or 50 driveways. So I always did that, saved up my money, was out there doing that, bought my first car that way, bought the great Pioneer stereo for my first car that way. And just I've always had that spirit. I just, to be honest, I don't fit in large corporations. I think I'm too impatient. I want things to happen now, not later. I want to think big, not incrementally. So I've always had a kind of innovative, fast moving, kind of spirit to myself. And actually started out, the firm I was with, Brinson Partners, was now Adam Street Capital. They're out of Chicago. Before I was there for about a year or two before I went to Minneapolis. And it's the time when telecommunications was just starting to boom. And so they actually had me become their telecom investor. Learn about all the different things in terms of, switching and routers and all the things that go into a telecom network that I eventually translated over to a data network, and kind of went from there into software and a little bit into med tech, and just kind of built up from there. But and the one thing I liked about coming back here to the Ohio Innovation Fund is that it allowed me to do both. Because out there in Silicon Valley for about, for the first 5-6 years, building up a network, building up, contacts, building up a reputation. And then I was starting to invest in the same people over and over again, very successfly. You had one CEO that sold a cloud company for $800 million, invested in him again, did it again. Similar, like the group at Infinera, that went public. One of the founders, Drew Perkins, found Mojo Vision, invested in that. They just actually closed around the day of $51 million in Series B. So, but it was kind of on autopilot. And so really the most exciting part for me about coming back to Ohio is both the investing piece, but really Ohio Innovation Fund itself is a startup. It's a early stage classic VC firm here in the heartland, right in the middle of all in Ohio. And that challenge of building the team, of building what our vision is, building how we, review deals, how we work with deals, which is very different than the West Coast, has just been really exciting. So it's a startup within an investment firm. I kind of love combining both of those aspects of what I do.
Now, when I hear Pioneer stereo, I get excited. Now, talk to me about what kind of speakers went with that stereo and what were you bumping on the Pioneer?
Back in those days, I was actually a Van Halen fan. So
okay, here we go. Well, we got to listen to some Van Halen together, man. On 10 or something, right?
Yeah.
So, well, you have the track record, as you said. You've scaled, invested in and helped scale multiple companies, not only to exit, but also you sold those companies or they went public. Now, what was it about, you think, your investment style or investment philosophy, or was it just about picking the right companies? What do you attribute your success to for all the companies that you invested in and then helped grow and then finally exit?
Yeah, I'd say it's a weakness that became a strength. So my undergraduate is a BSBA at Ohio State in the Honors Accounting program, and I got my MBA at University of Michigan. So I'm not a computer scientist. I'm not an engineer. I'm not a chemical engineer, a chemist, a biologist. And so to some extent that, when I'm we recently are investing in some companies with Mike Triplett here, who had done MyoNexus here in town. So I don't have that deep science background. When I talk to electrical engineers or computer scientists that are founding software or data science or cyber companies, I don't have that deep engineering background to connect on that level, which to some extent is a weakness, but I've turned it, I believe, into a strength. And what I mean by that is things have to just make sense at a very simplistic level. So I think, I do have, one of the things that I do have is good analytical skills. So kind of able to kind of think through and solve problems, in a very analytical method and kind of making sure things make sense. So I almost have to dumb down these companies to say, do they make sense to me? And if they do make sense to me, they're going to make sense to the market. And so I've noticed that about all my successes, no matter how technical they are, I could explain them to anyone at a cocktail party. They say, yeah, that makes sense. Take two different examples. One on the healthcare side. If someone is diabetic and they have to remember to stick their finger with a needle every 5 or 10 minutes and then, did I just eat or what have you? Well, what if you had a monitor that basically gave you a reading every 5 minutes? Am I too high and on my way up, therefore give myself some insulin, or am I too high on my way down, therefore don't overload myself by giving myself more insulin? If I'm too low, stop me from crashing. Would that make sense? That went to your phone. Absolutely, and that became Dexcom. Something very, very technical I did was a firm called Infinera. They were dealing with indium phosphide chips and all this, very, deep technical, a bunch of different deep technical expertises had to come together to create this. But at a high level, they're saying, okay, right now in the average network, in the switch that goes in a data network or in a communications network, there's 300 components in there. What if we took 200, 250 of those and combined and made them into a single chip the size of your fingernail? Would that be, and I don't even understand how it works.
Right.
And the bottom line is it's going to be smaller, it's going to be less costly, it's going to take up less space, and it's going to be driven by software, so it's going to be a lot more powerful. And that's what drove Infinera. So I think, making companies boil it down to kind of what do you do, why is it important, what's your inherent competitive advantage, so I can understand. And then I basically partner with people that are in the industry from a technical perspective to kind of do, kind of partner with them from a technical due diligence perspective that are expert to provide that level of diligence as well. But I think it's really making companies boil it down to simple, impactful, concise statements that I can understand, and therefore customers and others will understand the value that they bring.
Got it. And, we'll loop back to that simplicity thing, because for first-time founders, and the reason why I think you kind of go back to a founder who's done it before, I think it was Twain who said, I didn't have enough time to write you a short letter, so I wrote you a long one.
Yeah.
Right. And brevity is a skill. Yeah. It's something that needs to be practiced, and a lot of first-time founders struggle with that. But what was the sales pitch? I mean, Ohio State with OU, they're coming together. They want to create Ohio Innovation Fund. They go out, they do the recruiting. There are, like you said, only 3 people out there or so with the track record, and then maybe the affinity for Ohio. What was the sales pitch, man? What attracted you to come back to Ohio and build the Ohio Innovation Fund, and what is it?
Yeah, and that my answer has changed over time. I should say expanded. The first reason to come back was I thought enough of the raw material is in place to actually come back to my home state and make a huge difference. In starting a process of traditional venture investing and improving the startup scene incrementally, hopefully more than incrementally. Didn't know what I was going to find, but thought, okay, there's enough raw material here. There's places like Ohio State, OU, and the different universities that have research and other capabilities. There's others like Battelle and the Cleveland Clinic. So you had enough raw kind of research or innovation going on. There seemed to be some pretty good software developers, some pretty good med tech people. So a lot was there to kind of mold together. And that was the initial reason to come back. A large part of it was, it seemed good enough to, it's something I really wanted to do coming back to my home state. That has changed over time, because now I really have gone from wanting to just be doing venture capital in Ohio as a classic venture capitalist to really transforming Ohio. And a large part of that has gone through because of the positive reaction of the generation coming up. If I look at the generation of millennials, the generation that's in college right now, graduating from college, they may not say, I want to be an entrepreneur, but they say, I want to have an impact. I want to work, I want to collaborate. I want to work in cross-functional teams. I want to be innovative. All the things that you can be as an entrepreneur. So, that the ability to transform Ohio and transform our economy from insurance and consumer packaged goods, which are all great industries, right? Stable, positive, love Nationwide, love Procter & Gamble and all that, but to data science and cybersecurity and cell and gene therapy and all these industries of the future that are the high growth industries, are highly innovative, are moving very fast. It has exceeded my expectations from that perspective that we can do this much transformative work. And we've been able to attract strategic partners into Ohio, like Facebook, like Microsoft, like Slack, like Sanofi, like Genentech, like Citi, like Dell, to come in and invest in and or partner with our companies, which has been a very pleasant surprise, because these these established companies are seeing that the reason they're coming here is they see us impacting their markets. We get on the radar with their customers, and they want to come and partner with those companies. And perhaps maybe it's going to be more than a partnership in the future, but that type of initial relationship is formed. But the biggest positive has really been the students. I started out, you'd mentioned Jill earlier. Jill was the first intern I had back, I think, in the summer of 2016. And so I literally, like, for the first year we started, I just had a summer internship. I think I had 3 people apply from Ohio State, and that was it. I don't think anyone applied from OU or anywhere else. And so she came on board. She was in the executive MBA program. Then she graduated from there and joined full time. I think the next year we had maybe 10 or 15 people apply we had probably 3 interns, something like that. Since then, fast forward to where we are today, we had close to 200 people apply just from Ohio State alone for our summer internship program. Just our summer internship program. We will have over 100 students this year that will come through OAF in 1 of 3 programs. We have about 50 freshmen, sophomore, where we do a kind of a one-day shadow experience. Hey, I'm a freshman, sophomore. I've heard about entrepreneurship. I've heard about venture capital. I want to learn a little bit more about it. We have 4 times a year we have a boot camp. We do it over spring break, winter break, beginning of summer, end of summer, which is anywhere from 10 to 15 students who spend a week with us, evaluating a couple of potential live companies we're looking at, and also hear each day from different CEOs, founders, and entrepreneurs at our companies to kind of get the next flavor of VC and entrepreneurship. Usually those are kind of sophomores, a few juniors. And then we'll have about 5 to 10 summer interns here at OIF that are usually in their, just exiting their junior year, rising seniors. They're saying, one of them was, for example, Matt Benson was from OU. He was an intern here saying, I might want to start a company. I'm not sure. I want to learn about it. I want to learn how do you start a company legally, raising money, the pitch, all that type of stuff. He came here as a summer intern, and then he came on as an entrepreneur in residence after he graduated, and then out of that, created eFuse. eFuse has leading, I think 9 to 12 leading it's an esports e-gaming platform that has 9 to 12 leading esports and e-gaming, players as influencers. He has, major, some are announced, some are not announced yet, including Buckeyes like Braxton Miller and those as investors. And there's a lot more behind that, even on a national level, as far as well-known national, sports figures and gaming figures are going to be, are part of it already. They're going to be announced over time here. And that all came out of the internship program. He was able to raise close to $2 million in a seed round. And he was an intern less than two years ago here at
Wow.
So it's really been an incredible experience. And we've been able to replicate that at our companies. The first summer we tried to do that at the companies after Jill was here for a little while. I think they viewed us as, hey, you want us to babysit your LP students? Nah, we're not that interested. So I said, okay, just send me some projects. So I sent projects. Then I'd send back the results. And they're saying, wow, Bill, great job. Thank you. I said, well, that wasn't me. Or was it Jill? No, it wasn't Jill. Who was that? That was our interns that did that. Oh, they did this analysis of the strategic partnership, or this analysis of a potential acquirer, or this analysis of a market, or what have you. And they're really impressed. So like one of our companies here in Columbus, Aware, has had 16 interns over just this last year at Aware as well. So we've really seen that blossom where now hundreds of students are kind of coming through the doors of OF, coming through the doors of our companies and learning about entrepreneurship, learning about innovation, and then actually forming companies, joining companies, and very importantly, staying here in Ohio. There's a lady, Julia, who just joined us at Aware, I think about 6 months ago. She graduated from Ohio State last year, and she was all set to go out to Silicon Valley. We probably never seen her again, or maybe 10, 20 years from now, she might have boomeranged back here. But instead of that, she's now one of the lead finance people at Aware, our cyber company here in town. So the whole idea of what OIF could do has expanded rapidly. I mean, in terms of, I like to look back 10 years from now, and look back and say, geez, in the areas of data science and cybersecurity and software and cell and gene therapy and med tech, we have 20 companies here in Ohio. Hopefully we'll eventually have 40 and 50. That really OIF was transformational in kind of recreating and renewing the Ohio landscape, the Ohio economy, and opportunities for students alumni, workers at these fast-paced, innovative, exciting startups.
Yeah, so you're not only contributing investments, you also, it feels to me like internship opportunity, but more so providing students an opportunity to figure out if entrepreneurship is something that they want to do. And then teaching them the ropes, right? And what better place to learn than working on actual projects for real companies instead of just theoretical case studies. And so, like you said, for Matthew Benson, and I hope to have him on the podcast soon to talk about that, and maybe he and I can dive into that if that's where the bug actually bit him. So how is OIF structured? I mean, you mentioned your LPs, that's Ohio State and OU. Are you raising from other LPs as well? And then what's the size of your average check, and how many investments are you doing every year?
So we have 7 limited partners. We've announced, 3 have announced themselves. Ohio State University and Ohio University were the founding partners. Kent State joined them, and then we have 3 others that are not announced. And then I'm a limited partner myself too, so I'm limited partner number 7. So I actually put my money where my mouth is from that perspective, based on some of the success I had out in Silicon Valley. In terms of investments, we typically do 4 to 5 companies per year. So we tend to be very selective. We'll look at, we might get in 20, 30, 40 proposals of that. Let's say engage in diligence on a third of those, and then narrow that down to the one investment we might make in any one quarter. Because we really then spend a lot of time with those companies. Very different than, and part of the reason that the students can become so involved is that in Ohio, we have, for example, Enable Injections has a fellow that runs it down in Cincinnati called Mike Hooven. He had done a company called AtriCure that he took public. I think it's close to probably $1 billion market cap now. So he's an experienced entrepreneur, successful, exited. He's exited a company as a CEO. That's not typically the case we run into. So we have to work very closely with the companies, not that they don't have the capability, but they just haven't been through it before. So it's part of making sure that there's different points in the company's evolution where they need to go and bring in the next level of process and leadership. They do that too early, and they become too bloated too quickly. They burn too much money, and innovation gets slowed down because it becomes too big company too quick. If they do it too late, things start to go off the rails because there's not enough process as you're trying to scale up. So because of that, we're very selective. Our check size really has ranged. I think our smallest investment is $250,000 in the company, and that's at a very early stage. Our largest overall amount in the company is between 4 to 6 million. So it's kind of in that, call it from 500,000 to 5 million is a reasonable range.
Now, founders are always gonna have a complaint. And I was listening to your Upside FM episode with Jay Klaus. And you were saying percentage-wise, 60% or more in terms of available capital to fund startups is in the seed stage, and maybe 20% in Series A or Series B, and then maybe another 20% beyond that. Founders in Columbus, if you go around, or Ohio, it's like, is there enough seed capital in Ohio? Like, no, there's nowhere near enough. And your check range, may put you kind of in the range of some seed stage companies. And if I understand correctly, even though ideally you want to see companies coming to you in the Series A to Series B, you occasionally, right, if the technology is just right and the opportunity is just right, you will look at a seed stage, but very, very limited. So how are you making decisions about that? Just so for the founders who might be listening to this, don't eliminate themselves from the discussion too early. Maybe they have something you want to look at, but they don't think, hey, he's going to fund my company because it's too early. Let's talk about that.
So for us, coming to OIF as a seed stage company is a no-lose proposition. It's a win-win. Because one or two things are going to happen. In like you said, in a very few cases, but they do happen, we find that the entrepreneur and the opportunity are just so phenomenal and just so awesome that we want to get involved right now. There's been a couple of those cases. There's a fellow, Professor Emery Coxwell over at Ohio State. He's actually a PhD at MIT, worked at the MIT Lincoln Labs at their artificial intelligence lab. He was actually one of the engineers early on as part of MIT for Sycamore Networks, which became a multi-billion-dollar company. And he just had a very, very innovative idea in cybersecurity, which is instead of putting the company's called Datanchor. Instead of typically trying to wall off data so only certain people can get to it, and then maybe you have dual authentication where who can get into it and firewalls and all this stuff, he actually embeds encryption in the data. So right now, I could be interacting with you and sending you very proprietary confidential data that has that built into it. The minute that I no longer want you to have access to it, or you kind of gone out of bounds, so to speak, and out of bounds could be someone stole your laptop, or you can geofence, you can use it in a certain location, that data is gone. And so it was just so innovative and so breakthrough that we wanted to work very closely with him early on. Some with Matt Benson, when he's trying to kind of create the first or the leading esports, e-gaming platform, we're like, okay, in both cases, for a few $100,000, we'd like to get involved early and really help you. Both are first-time entrepreneurs, what have you. So that's kind of a best case win. A worst case win is that we get to know you, and probably 9% of the Series A investments we make are people we knew from when they're seed investors. Because if they come to you and say, hey, Bill, hey, Jill, hey, Christina, hey, Faith, here's what we're going to do. We're going to raise $250,000 and achieve A, B, C, D, and E. And they come back to us a year from now and said, we did that and achieved A, B, C, D, and E, or maybe even it was A, B, C, and D, and we didn't do E because we heard from the market was we do F and G, and we did that instead. That is huge credibility. And that relationship and trust has been built, and we understand what they're doing. And so, that I would say no entrepreneur can go to VC too early and start building that relationship. Go far before when you need the money and just kind of tell them, here's my vision. What's your feedback? Here's what I intend to do. Go out and do it and come back and say, here, I did that, and update them along the way. And that builds a ton of credibility, a great relationship. And quite frankly, then the company, we don't talk about portfolio companies because that's like, okay, well, there's like all these companies out there that we're detached from, and this can fail, that can't fail. It's almost like we're managing like inanimate objects out there or something like that. We try and take each company as seriously and be as passionate about it as the founder is. We respect that the founder is the founder. It's their idea. It's their blood, sweat, and tears. But we try and treat each company with that same level of respect. And so if you come early to a venture fund like ours, we almost feel we've been part of the founding process. And it's not a big leap then to lead that Series A round for the company.
Okay. And, do you guys find, and I know you have specific industries that you would like to invest in.
Yeah.
And one of the things that you said when we were on the phone, you said, what gets Silicon Valley excited are, companies that are growing quickly, that are scaling, and they want to see big exits. And so you have to think bigger. And that's one of the issues that you would like to see, that as an ecosystem here in Ohio, really start thinking bigger, really start going after big companies, big relationships, big partnerships, like you mentioned, Aware's partnership with Facebook, and those kind of relationships. So do you find that you have to be very, very strict in terms of your industry, or because of just the nature of where we are as an ecosystem right now, are you allowing for some flexibility? Because one of the things that I see also with founders is if a fund is only looking to invest in certain industries, folks tend to eliminate themselves and not even go have a conversation. Whereas you have a company like eFuse, and they maybe didn't strictly fall into what you wanted to do, but the opportunity was just there. So do you find that because of Ohio's kind of natural like logistics, maybe you get a lot of logistics pitches, or like you said, consumer packaging pitches, that you may stray kind of from your core industries that you want to invest in if the opportunity is right?
Yeah, I think you're spot on. Ohio is different than Silicon Valley. There are firms in Silicon Valley that say we do software as a service. We do, within med tech, we only do biopharma, or we do these type of devices, or in Ohio, we can't be that way. If I said we're going to be cyber and data science, I need to have at least 100 or 200 of those companies out there in Ohio to pick the top 10% of to build a portfolio of 10 to 20 companies. It's just not there. So out of necessity, we need to be flexible, and we are flexible. I mean, we will not attract and build up the Ohio economy. And these could be good things for the founders, but with a bunch of exits at $25 to $50 million. They need to be, we do want some at $1 billion plus. We think we'll have that. But a bulk of the exits are probably gonna be between $100 million and $500 million. That's the bread and butter of what we're seeing in Ohio. There's solid cybersecurity, solid data science, solid med tech companies. There may be a few like ScriptDrop or Enable Injections that can and likely will reach that $1 billion plus, either as a public company or as an acquisition. So I never thought I'd come to Ohio. My first company was actually a biorepository company. And you say that's a fancy word for lab freezer. It's actually, Sterling Ultra Cold down in Athens. They produce these kind of industrial grade lab freezers for Genentech and Amgen and Roche and NIH that actually store lab samples for researchers and help them keep the lab samples safe that they utilize and find the cure for different types of cancer and those sorts of things. So we're definitely very flexible because of being in Ohio. There's also, even as in California, there's another aspect to this, and that is, how do you view the world? Do I view the world that Christina and Faith and myself and Jill are probably at the most smartest, innovative people, and therefore we will determine what our thesis is and where we're going to invest? Or do I believe that, well, we know what we're doing, there is a lot more innovation, smarts, entrepreneurship, just great ideas out there among very innovative entrepreneurial people? And we really believe the latter. So I have a high degree of respect for the creativity, the innovation, the smarts of people out there to come to us with things we'd never have thought of. Mm-hmm. And so if we're tied into this thesis or that thesis or what have you, we're canceling out the creativity and innovation of the market. I mean, who 10 years ago could imagine where some of the stuff in AI and machine learning are going to be today, and who can really foresee 10 years from now what that's going to look like perfectly? So it's a very different philosophy we have in terms of really respecting entrepreneurs and seeing things kind of being very open to very innovative, creative ideas. We validate those, right? We got to make sure that it makes sense. There's a good product market fit. But I had no idea Emory was going to come to me with embedding security into data. I had no idea Matt was going to come and say, "Oh, I'm going to create this esports e-gaming platform." And 5 years ago, where was esports? Where was e-gaming? I mean, there's probably still Xbox and stuff like that, but so it's just a different philosophy from that perspective.
Yeah. Now, in terms of investing, even though a lot of these folks, you want to see them coming at Series A and B, but it's really about picking teams, right? I hear that all the time from an investor perspective. And you not having a technical background, hopefully you have some affinity for folks who don't have technical backgrounds that are looking to build companies as well.
Yeah.
Do you find that with the successful teams that you look at, they come to you with a clear understanding of the problem that they're looking to solve? Maybe in some ways that problem is impacting them personally, or given that some of your LPs are universities, do you find that you can also be a successful non-technical founder if you went out to, let's say, the commercialization office and partnered with a scientist that's looking to bring that technology to market? Where do you find, is there a fine balance between the two? What are you looking for in the companies that you invest in, the teams that you invest in, a problem that they understand fully and are solving, maybe impacted by it, or somebody who partners, let's say, with a commercialization office and they want to bring that technology to market? Yeah,
and we've actually, like you said, there's a balance. We do both. I take one example is someone like Rick Arlo up at Complion in Cleveland. He was a PhD MD at Case doing clinical research, and he was getting frustrated with binders and everything else. And so he identified a pain point. He said, I want to do something about this. I want to create a software platform that allows for kind of workflow automation, allows you to store things in the cloud versus in binders, those sorts of things. So that's one example. You take Jeff Schuman over at Aware. Jeff was at Nationwide kind of managing their collaboration platforms, and he saw some real issues around that in terms of if we don't have this compliance, if we don't have security, the CISOs aren't going to allow this to roll out because it needs to be, we can't have harassment, we can't have data, confidential data leakages, those sorts of things. And so that kind of caused him to form Aware. So a lot of times it's people finding their own work somewhere, a pain that they want to solve. On the other hand, we have partnered with universities, like in the case of Emory I talked about with Datanchor. He came through the process through the Technology Commercialization Office over Ohio State, and we partner with him. And one of the things I forgot to mention earlier, sometimes we bring in people from our network to help as well. So in this case, we brought in one of our venture advisors, Mike Hughes, who was the Senior Vice President of Worldwide Sales at Barracuda, which he started when it was a $5 or $10 million revenue company, built it up to hundreds of millions of dollars revenue in $1 billion plus public company as a cyber company to partner with Emory. And they talk every week and kind of go through what's happened that week and kind of help provide feedback for Emory and those sorts of things. So it's really a mix of both.
Now, when if somebody listens to this and say, hey, I want to talk to Bill, I have an idea, I'm building a company, what do people need to do to prepare in order to engage with you? What are some of your kind of, hey, you should already know this by now, right? When they go to approach you, how should somebody prepare to come to Ohio Innovation Fund with an idea for or a company? Maybe they're looking to raise immediately, or they just want to start building a relationship. What's the bare minimum in terms of preparation?
Bare minimum is really a strong understanding in terms of what problem you want to solve. We are going to do this, and it's important for these reasons. Like I said earlier, every successful company that has been exited I've been involved with, in a sentence or two, you can very concisely and impactfully state why they should exist and why they're critically important. For the other ones that aren't successful, they can talk for half an hour, and you're still trying to figure out, okay, that might be nice to have, that sounds kind of okay, but so that real statement is there. And going kind of melding that a little bit with your previous question as far as teams, people that are opening to listen. Because if they're willing to listen and take feedback from, what is the market really telling us? Do we need to add on this capability? Do we need to, instead of going after this industry, go after that industry? You have to pivot a lot and be very flexible in a startup. And so we're looking for people that are coming to have a real interaction. So they feel like, okay, here's a problem I want to solve. Here's how I want to solve it. Here's some of the steps I want to take. Here's some of the team I want to build. And then really engage in a discussion where they want to, talk about it, receive feedback, incorporate feedback. Because that's so important with the companies we've seen be successful. They will take feedback from their investors, feedback from the board of directors, feedback from the market, feedback from their teammates, feedback from all over, and really incorporate that and into what they're doing to take their company to the next level. Because really, when we're working with a company, it's really peeling back what is holding back that growth. Is it something in the product? Is it something in the market? Is it something in our messaging? Is it we need to build up the sales team better? What is it? And so you constantly got to be asking and learning, and you can't hide anything. You have to be like radical transparent. You want to find out what the problems are so you can address them. What is causing me not to grow even faster? Even if I'm growing fast, how can I grow faster? More salespeople, add on this to broaden our product offering, attack a new industry segment, whatever it is. And so that's what we're looking for, people that have a defined problem, that are very open to market feedback and are very, collaborative and listen.
Yeah. Now, two more things before we wrap.
Yeah.
The elephant in the room, COVID-19.
Yeah.
Right. I know you wanted to talk about it because maybe your companies are experiencing, we're all experiencing it in one way or another personally. And I'm glad to see that you're doing well. I'm doing well. My family is healthy. So very, very thankful for that. But as you have a lot of experience in this world, nobody has seen something like COVID-19. What are you thinking about as an investor? And, what kind of conversations are you having with your companies regarding COVID-19 and its impacts?
Yeah. We have companies across the board on this. We have some like ScriptDrop and Aware and a few others that are significantly positively impacted. I think there's an article today in the local Columbus press where, we're going to grow at ScriptDrop much more, 7 times, 10 times this year over last year. And a big part of that is is somewhat COVID driven, as well as expanding out our, our customer base. Aware does the cybersecurity for collaboration platforms like Slack and Microsoft Teams and Facebook Workplace. So obviously more and more remote working and work from home, and therefore that's positive. So for those companies, they're seizing the opportunity and trying to embed themselves and really take advantage of a market acceleration where, for example, in the case of ScriptDrop, they were accelerating things they were going to deploy 2 or 3 years from now into like last month. And so that's one set. There's another set of our companies that are on balance, like you take Complion, which does a clinical trial management software in terms of, there are a lot of clinical trials on hold. There are some COVID-19 trials, but there's also clinical research organizations that want to do things more remotely, efficiently, that our software allows them to assure the compliance of clinical trials in that manner, much more efficiently and remotely. And there's some that just for now, it's just, revenues are down 30, 40%. And those companies just need to face reality. And they have. We've had some cases where our entrepreneurs and management teams and whole staffs have taken 30% temporary salary reductions. In those cases, we are encouraging our companies to say, okay, because these people are committed, passionate, signing up for this, for the long term, let's perhaps give them some more equity, some more stock options, and those sorts of things to reward their efforts here for when we come to the other side of this. And I am hoping that this downturn isn't as structural as past ones. In 2001, with September 11th, that caused a series of events. But one of the things that happened at that point in time was that basically, I think close to half of all software that's purchased was sitting on a shelf. It wasn't implemented. So there's a lot of just companies that didn't make sense that were venture backed. In 2008, 2009, there's more a structural mortgage crisis, banking crisis that was going to take time to get through. I mean, nothing was really going wrong until COVID hit, right? I mean, the economy was doing pretty well. I mean, everything was fine. And then it hit. I'm hoping that therefore there'll be more of perhaps not a pure V-shaped recovery, but like as we get towards the second half this year, things will start returning with social distancing and some other things still in place, start returning a little bit closer to normal, and business will start getting back to a little bit closer to normal. So I don't think this is a 1 or 2 year downturn from that perspective, but I am encouraging all of our companies to be in a position from a cash runway perspective and operating perspective at the current kind of burn rates and revenue levels to be able to see themselves well into 2021.
Yeah. Now, with that said, like you said, there aren't any issues structurally. It seems like the medical community is moving at warp speed right now to find a vaccine, and everything changes, right? If we do find a vaccine and we manage to flatten the curve, and we do that over an extended period of time, we don't have issues in the fall. Again, a lot of uncertainty, but it feels like it's manageable.
Yeah.
Are you guys still deploying capital at the same rate despite what's happening now, or are you finding that a little bit of caution is setting in, maybe not just at OIF, but across the venture space as well?
Yeah, there's definitely been much more caution. I'd say, a lot of people, we are not seeing as many new companies being formed right now. I think a lot of people, I mean, it's hard to think about how do you get a team together to form a new company right now, because a lot of the creative process is back and forth that you can do maybe a little bit over video conferencing, but you really need that interaction. So we are not seeing the same level of deal flow that we saw before as far as emerging new startups. As far as existing startups, our first order of business was taking care of our own, right? Making sure all of our own startups are well positioned to, as many as possible, get through this. And we've been doing a lot of that throughout March and April, and now going to May, most of that's behind us. We feel that most of our companies are in a financial position and with an operating expense structure that does see them well into 2021. But we are also looking at new companies. We're going to announce a cell and gene therapy investment within the next couple of weeks. So things are going on. Knock on wood, we'll have a successful exit to announce in the next couple of weeks. So there is activity still happening, but definitely more definitely more cautious. But historically, if you looked at, I mentioned, Dexcom before and Infinera, two companies that I think Dexcom's market cap right now is about 25 billion. Infinera is still north of $1 billion. Those companies were started like in 2002, 2003 for Dexcom, and in 2007, mostly 2008 for Infinera during the downturn. Now is a good time to build up a company. So we are looking at, and we will announce a cell and gene therapy company that is somewhat related to COVID, not directly, but somewhat related to that, but that we feel we can build up over the next few years, because it is a great time to, everyone's very focused right now on, building value, creating value, making things happen. So we are being more selective, but we are still deploying capital.
All right. Well, I think all great insight. Again, we're going to play it one day at a time and see what happens, particularly as some states start to reopen.
Yeah.
So these are going to be interesting next couple of weeks, because it feels like we're running parallel experiments all over the world with public health. So we'll see.
Yeah.
So I wanted to loop back around, and this being the final question, talking about, and I think we all hope for Ohio to make our big splash on the startup stage and start to really be a player.
Yeah.
I think some of the things that are going to come out of that are more startups getting funded, attracting more venture capital to the state, more economic development, job growth, job creation, particularly high wage jobs, right?
Yeah.
So one of the things you said is before COVID, the economy was humming along, but we understand that, we still had fellow citizens where a lot of them can't handle a $400 emergency, right? So how many that number is, we don't exactly know. There's some issues with the data or the survey that was done in that study, but we know it's a lot of people. We have kind of a renewed appreciation for what are called essential workers now.
Yeah.
And those are folks who maybe haven't been celebrated as they are being or need to be celebrated going forward. So one of the things that you mentioned on our call was we have to have a certain mindset. And so what OIF is doing, and based on what we've talked about so far, I think you're putting in place the things that need to happen in order for us to make that big splash. But what do you think as an ecosystem we need to be doing, right, for to get that kind of attention, attract that kind of capital, and really grow jobs?
Yeah. I think, we are, like I said earlier, our companies are doing enough to attract strategic partnerships. So that's the first, step in this, because strategic partners are going to notice you when they notice you from the market. So Facebook noticed, oh my gosh, at all these workplace deployments at these major customers like AstraZeneca, they're using Aware. Maybe we got to partner with this company. So that's the first step. I really think the next step to get on the map, you have to have exits. You just have to have exits. And I'm hopeful, optimistic that there will be multiple successful exits at a high level. I mean, I look at companies like ScriptDrop here in town that should be able to exit at a billion or multi-billion-dollar type valuation down the line with the way they're growing, their revenues. You look at Enable Injections down in Cincinnati. You look at a number of other companies, Amuda in the data science area, Aware in the cybersecurity area, Sterling Ultracold, which is, got a very nice revenue base now down in the, medical device area that maybe are more in the hundreds of millions, maybe approaching more than that over time. I think north of $1 billion, they do have that possibility as they keep moving forward. I think we just have to be somewhat patient. I think we shoot ourselves in the foot. I've heard some people talk about, we're already like the next Silicon Valley today. Because if someone flies here with that expectation and says, okay, show me your top 10 data science and cybersecurity, top 10 data science, top 10 cybersecurity companies, top 10 software companies that are all be unicorns the next year or two, I don't know where I take them. But there are enough that I think we can start building up. And the big thing is that out of each company, look at Cover My Meds, right? Cover My Meds was successful. Well, guess who's running ScriptDrop? People from Cover My Meds, Nick and Amanda, right? And that will happen as Aware exits and as ScriptDrop exits and as these companies exit, they'll be, the head of engineering has this idea. The head of product has that idea. This marketing person has this idea. One of the founders has this other idea. The head of data science has this idea. And all of a sudden we'll have 5 to 7 to 10, high potential startups coming out of each success we have. And it just takes time. So I think we have to be patient. But like you said, we are seeing people in our startups thinking bigger and trying to do things faster, because the other thing is, if you have a great idea and you think you have a great idea and it is a great idea, you don't have a lot of time, because there is talent in Silicon Valley, there's talent in Boston, there is talent in Israel, there's talent in Asia and elsewhere that will replicate what you're doing unless you move fast. So we're starting to see companies move fast and think big. And I think it's just a matter of time over the next 3 to 5 to 7 years to see that continue to build up. I don't think it's something you can rush. It doesn't happen overnight. But I guess I'd leave it at that.
Yeah. So patience, perseverance,
yes.
Big ideas.
Yep.
And let's get some exits done. So Bill, thank you so much for spending your time with me. I really appreciate it. And I do my one takeaway at the end of every podcast that I do. And so my one takeaway is brevity, right? Understand your problem, keep it simple, and explain it in a way that somebody who has no idea the technical side of your product or service can understand it and be able to explain it to someone else.
Yep.
Thank you so much for joining us on another episode of the 614 Startups Podcast. Peace.
All right, thank you.
All right, Bill. So I'm going to stop the recording now.
Okay.
And if you don't mind, we're going to chat for a couple minutes about how you think things went.